ICICI's Group Term Assurance Plan takes care of your office family.
When the market moves, we don't just report, we decode.
From the boardroom to the trading floor, we track what's driving business and impacting investor sentiment.
With insight that empowers and guidance that builds wealth.
Nuvama presents CNBC TV18 Market Central.
For your daily source of market intelligence and wealth creation, with a commitment to doing it right.
This is Network 18, and you're watching CNBC TV 18.
Co-powered by SBI, the banker to every Indian, truly.
Good evening. Thanks for joining us on Business 360. I'm Shireen Bhan. The headlines that we're tracking for you this evening. The market snaps a two-day winning streak. The Sensex nosedives nearly 1,700 points. The Nifty slips below 22,850, wiping out over 9 lakh crore rupees in investor wealth. PSU banks and real estate companies take the worst hit. The rupee's free fall continues. The currency hits a record low of 94.80 to the dollar, on track for the highest yearly loss in nearly 14 years. The government slashes excise duty on petrol to 3 rupees per litre and on diesel to 0. The move is expected to soften the blow for OMCs by up to 20,000 crore rupees, but the cuts will not change prices at the pump. The government also imposes additional duties on diesel and ATF exports to ensure adequate domestic availability. The duties will be reviewed every fortnight. The government says it is expected to garner about 3,000 crore rupees a month from the hike on diesel and ATF exports. This will offset the 7,000 crore rupee revenue hit it may incur on account of the excise cut on petrol and diesel. Defence Minister Rajnath Singh to head an interministerial panel to monitor the West Asia conflict. Other members include the Home Minister, the Finance Minister and the Petroleum Minister. The panel will discuss actions that the government may need to take in lieu of the war. Tax relief on more items is being considered too. US President Trump extends the deadline for Iran to reopen the Strait of Hormuz by 10 days to the 6th of April, claims the request came from Iran and talks were going very well. Tehran consistently denies these claims. Iranian Foreign Minister, while speaking at an emergency UN Human Rights Council session, calls the Minab elementary school attack a war crime. Israel continues to bomb Iran as the war completes 4 weeks, claims it targeted ballistic missiles and aerial defense system production sites across the country. Kuwait says its main commercial port suffered damages in an Iranian drone attack. Wall Street Journal reports that the US plans to deploy 10,000 additional ground troops to West Asia. Infosys continues its buying spree in FY26 with 2 new acquisitions, buys healthcare tech consulting firm Optimum Healthcare and insurance platform Stratus for a combined $560 million. Total value of the acquisitions in FY26 crosses $800 million. Well, let's start with the day's market action. The market snapped its two-day winning streak with frontline indices falling over 2%. Nifty fell below 22,850 and the Sensex was down nearly 1,700 points today. All sectoral indices closing in the red. The mid-cap index down over 2%, almost a 3% cut there on the Nifty Bank, and the Sensex and the Nifty down by about 2%. For the week, the markets have also closed in the red. For the 5th straight week, in fact, the markets have closed in the red. The Sensex down a little over 1%, 2% lower on the Nifty and on the Nifty Bank, and the Nifty Mid-Cap Index lost about 1% or so. Financials did underperform, and that is why we saw the Nifty Bank lower. Prashant joins us now to wrap up what has been a very painful week for our markets. Prashant, the uncertainty with respect to the Iran war continues. How are traders looking at the week ahead?
The market pulled back, in short order. 22,800 around is where we finally left off at. Add to all of this, of course, is what's happening with macros, growth estimates being brought lower, inflation forecast being bumped up, current account deficit as a percentage of GDP being seen higher, earnings expectations being brought lower. So all of that showing up in the rupee in a big way. We were same time last Friday, we were pushing to the 94 levels. In a week, we are pushing 95 now on the dollar rupee. I'll just quickly run you through the indices and where there was maximum amount of pressure. PSU banks down 4%. You had the real estate index down about 3%. Autos, which was down about 2.5%, and the capital market index, which was down about 2.75% as well. Wix, which sold off day before yesterday, was up about 8.5% today. But that's it. I mean, that's the only index actually which was higher. You could maybe look at the CPSE space, which was kind of absolutely flat. Otherwise, it was pretty poor all across. The large cap losers and, Shriram Finance had run up 100 rupees over the last 2 days. The CCI approval, of course, came through, but, ended about 5.5% lower. Tata Motors passenger vehicle down about 4.75%. Indigo down 4.5%. Reliance was a big one. That export tax, right? I mean, taking a bite out of it, so almost 4.5% lower. Bajaj Finance, State Bank of India with the other 4% lower today. ONGC was the single biggest gainer with a 4% pop, and next in line was a Wipro and a Bharti, which were slightly higher as well. Now, on the downside, advanced decline is pretty weak, pretty poor. Spark, Eco Mobility, lots of these names, but not really on the back of lots of volumes coming through. Advanced decline skewed really, but if you look for volumes, you would not really find very much. Pretty thin as far as the broader market action is concerned.
Prashant, many thanks for joining us. Now, the government has stepped in to provide some relief to oil marketing companies. Remember, OMCs have been bearing the brunt of the steeper global oil prices since the start of the Iran war. The government has cut excise duty on petrol to 3 rupees a litre, and the duty on diesel has been cut to 0. We learned that the move is expected to soften the blow for OMCs by up to 20,000 crore rupees. However, prices at the fuel pumps, which means the prices that you and I will pay, remain the same. There is no change there. Now, the government has also imposed an additional duty on diesel and ATF exports. So remember, we used to have a windfall tax. Now we have pretty much the same. It's an export tax to secure supply for domestic industry and help mop up the revenue loss that the government is accruing. The government believes that it is expected to garner about 3,000 crore rupees a month from this export tax. This will offset a part of the 7,000 crore rupee revenue hit it may incur due to the excise cut on petrol and diesel. Now, the allocation of commercial LPG has been increased to 70% from 50% earlier this month. The government has said that additional supplies will be directed towards labour-intensive and essential sectors like steel, automobile and textile, among others. Separately, as per Reuters, the government is in talks with Moscow to resume direct sales of LNG for the first time since the start of the Ukraine war. The report adds that the government has already reached out to Washington for a sanctions waiver. Petroleum Minister Hardeep Puri has said the government had only two choices to manage the rising prices of crude oil prices, either increase prices of fuel or take a hit on revenue. He added that the government chose the latter to insulate Indian citizens from global price volatility. The centre has also maintained that India has sufficient crude inventories. Finance Minister Nirmala Sitharaman said the excise cut decision was taken by Prime Minister Modi in yesterday's cabinet meeting to ensure adequate fuel supply to consumers. Take a look.
It was decided that there should not be a shortage and there should not be an increase in price due to the global situation in crude, in petrol, diesel and in ATF. Today we have announced a decision whereby we will be giving support to the oil marketing companies so that they can import the material and not really, even if it is imported at a higher cost, the common citizen will not have to face any increase in the price of petrol or diesel. For ATF, which is so required for aviation, we are making sure that the prices will not go up and the oil marketing companies will be supported to bring these commodities to India. Those refineries which get the material from outside, refine them and send as exports these materials will now have to face a higher duty so that both of diesel and ATF so that these materials are available for India. They will be made available for domestic market, and ensure that we shall not be sending products at a time when we so need them without any shortage.
These duties on petrol and are nil at present. So the duties which have been imposed on diesel and ATF. The duties on petrol are nil based upon the present crack margins. However, the rates will be reviewed on a fortnightly basis. The idea behind having these changes is to prioritize a domestic availability of these products.
We have sufficient crude inventories और अगले 2 महीने के लिए supplies have been lined up. Situation is comfortable with respect to LPG and PNG also. हमारी refineries 100% या उससे भी ज़्यादा capacity पर operate कर रही हैं और domestic production of LPG has increased by almost 40%.
Thank you for that. Well, as the finance minister pointed out, this is a relief for all marketing companies and nothing will go in the hands of the consumers. So all marketing companies will see some relief on their marketing margins. So let's talk about the impact now. First, they've been looking at a lot of marketing margin losses to the tune of around 27 rupees per litre on petrol, 50 rupees per litre on diesel. And with this, those losses will come down. But do remember, despite this excise cut, the losses will not become nil. They will just become lower for all these companies. The second part, of course, it will help them with working capital issues that these companies have been facing, better cash management, cash flows will improve, and the fact that the excise duty has been cut will improve their P&L overall. Since retail prices are unchanged, the benefit will stay with the oil marketing companies. If we look at their balance sheet strength as well, it has been improving in the last couple of years, so they are in a better position to absorb such shocks that would come by. For IOCL, BPCL and HPCL, for all of them, net debt to equity has been coming lower. If you look at a BPCL, it is at 0.3 times. For IOCL, it has reduced to 0.8 times. If we talk about HPCL, which has the highest exposure to the marketing segment, that's where it is 1.4 times. But yes, it has been reducing for all these companies. For consumers, as I said earlier, there's no change. Inflation remains as is. Household budgets will not change. And you will pay the same prices for petrol and diesel as you've been paying earlier. The other change that has come by is they've increased or they have levied export duties on export of ATF and diesel. This is to ensure that there is enough domestic availability of these two fuels and there is no shortage as such. So it has been increased by 21.5 rupees per litre on diesel and 29.5 rupees per litre on ATF. But this is a positive move considering that there will be enough supply in the country itself. But some of these exporters like Reliance, CPCL, MRPL, they will be in focus on the negative side because of this. Now just a quick check on how prices have moved globally as far as fuel is concerned. How much have they increased since the time the West Asia war is increased? For India, it has stayed as is. For US, it has been to the tune of 38%. UK has seen a 24% increase. Germany at similar levels. And France has also seen an increase of 30%. So there has been no price hike for customers. There's a relief in terms of excise duty cut that has come for oil marketing companies.
All right, Sonal, many thanks for joining us. Now, the government has formed an interministerial panel under Defence Minister Rajnath Singh. Sources tell CNBC TV18 the panel will look at issues linked to the war in West Asia and the steps the government will take. We also learned that tax relief on more items could be considered. The Finance Minister, Home Minister, Petroleum Minister and other ministers are part of this panel. Explosions intensify in West Asia as the war completes 4 weeks, with President Trump extending the pause on strikes at Iran's energy infrastructure by 10 days. Now, Trump said on Truth Social, and I quote, "Talks are going well despite erroneous statements to the contrary by the fake news media and others," end of quote. Separately, in an interview to Fox News, the president also said that Iran had asked for a 1-week extension, but he decided on 10 days because they gave him ships. Trump had initially given Iran 40 to open the Strait of Hormuz to oil tankers, threatening to destroy its power plants if they didn't act. But he's now extended the deadline twice. Doubts about the possibility of a de-escalating Wall Street. Benchmark indices, the Nasdaq and the witnessed their sharpest fall since the start of the West Asia war. Asian and European markets also in the red. Reports of more U.S. ground troops in the region sparking fears of a further escalation. The Wall Street Journal reporting that the Pentagon is also looking up looking out to send up to 10,000 additional ground troops to the region to give President Trump more military options. Meanwhile, Gulf countries remain under fire, with Saudi Arabia, Bahrain and Kuwait all saying they intercepted missiles. 2 key ports in Kuwait were attacked, resulting in material damages, but no casualties reported. Iranian missile attacks also struck the northern areas of Tel Aviv. The blast killed 5 people and injured several others. According to Israeli military, the attack involved 1 ballistic missile and multiple cluster munitions that dispersed in smaller explosives. Israel also continued to bomb Tehran with a new wave of strikes on civilian infrastructure. Israel's attacks on targets in the heart of the city came after the country said it would intensify strikes on Iranian weapons production facilities. Smoke also rose over Beirut. The southern suburbs of the city were hit with airstrikes. This as Israeli military's ground invasion near the Lebanese border also took speed. Meanwhile, Iran's Foreign Minister Sayed Abbas Araghchi addressed the UN Human Rights Council, said the war of aggression by US in Israel is blatantly unjustified and brutal. He also said the US betrayed diplomacy for a second time in 9 months and called the attack on a girls' school in Minab a war crime.
We have very substantial talks going on with respect to Iran, with the right people. You know, I told you about a present, right? Steve, can I reveal the present?
You can do anything you want.
Thank you. They said to show you the fact that we're real and solid and we're there. We're going to let you have 8 boats of oil, 8 boats, 8 big boats of oil. They then apologized for something they said, and they said, we're going to send 2 more boats. And it ended up being 10 boats. All right, I hope I haven't screwed up your negotiations, but I thought it was appropriate to say, because I did taunt you the other day by saying they're going to give us a present.
Well, that is President Trump speaking at that cabinet meeting that was streamed live. Moving on now, the Bombay High Court has dismissed a plea seeking a CBI probe into allegations that Reliance Industries illegally extracted natural gas from ONGC fields in the Krishna Godavari Basin. The petition claimed the company carried out unauthorized drilling between 2004 and 2013 and 14. Reliance maintained it had the right to extract the gas as it naturally moved between blocks. Shares of Fino Payment Bank rose in trade today after a special judge for economic offences in Hyderabad granted bail to CEO Rishi Gupta. The bank has clarified that the ongoing investigations pertain to certain program managers associated with multiple banks, including Fino, adding that the investigation does not relate to the bank's duty compliance. Meanwhile, his withdrawal reappointment Rishi Gupta as NCO due to the ongoing case. His reappointment will be submitted for shareholders not in appropriate time. Managing CEO Siddharth Mittal will step down on the 30th of March and move to a new role within the group. Biocon beloved CEO and MD Sri Tambe has taken over from the 1st of April. Tambe has been appointed for a 5-year term. The company has also chosen Kedar Upadhyay to take over as the Chief Financial Officer. We'll head into a break, but up next, Infosys continues its buying spree in FY26 with 2 new acquisitions. Total value of the acquisitions this fiscal crosses $800 million. Other IT majors also spend big as Indian IT leverages M&A to grow.
हाथ, ये जो हाथ है ना, सिर्फ लकड़ी ही नहीं, हमारा कल भी तराशते हैं। बंद हो या हो कोई स्ट्राइक, इनका स्वेटर हमेशा खुल जाता है। इन हाथों का यही तो आपसे नाता है और इन्हें हम आसानी से लोन देकर अपना फर्ज निभाते हैं। कैप्री लोन्स फर्ज निभाते हैं।
कितनी सड़कें, कितने पुल, कितने बांध, कितनी नदियां, कितना आसमान, कितने शहर, कितने गांव, कितना बड़ा अपना देश अपनी गोद में लेके जा रही है। ये जो अपनी गाड़ी है, इस पे भारत आगे बढ़ता है। टाटा मोटर्स, कमर्शियल व्हीकल्स, बेटर ऑलवेज।
Health insurance is only useful when you're admitted to a hospital. That may have been true years ago. Not anymore. Today's health policies cover diagnostic tests, doctor consultations, and medicines incurred before admission and after discharge. Because treatment doesn't begin on the day you're admitted, and recovery doesn't end when you're discharged. Many procedures today don't even require a 24-hour hospital stay. Some procedures like cataract, dialysis, and chemotherapy are commonly covered as daycare treatments. Several plans also include Ayush treatments and modern advanced therapies. Health insurance today supports your entire treatment journey, not just the hospital bill.
Health Cover Uncovered, an initiative by Star Health Insurance and CNBC TV 18.
India's startup story is evolving from disruption to building enduring brands. Meet the founders redefining categories with purpose, scale, and innovation. Watch CNBC TV 18 and IDFC First Bank present Leap to Unicorn Season 3 at these times only on CNBC TV 18.
दवा इंडिया, ये घर है जिसके दरवाजे हमेशा सबके लिए खुले रहते हैं।
कितना अच्छा लगता है जब कोई बिना बोले हेल्प कर दे, जैसे दवा इंडिया। यहाँ केयर न शर्तों में बनती है न ड्यूटी आवर्स में, तभी तो ये है हर घर की फार्मेसी।
दवा इंडिया, हर घर की फार्मेसी।
Look, this famous guy is giving me investment tips.
Sure, it's only for you.
Oh. Pay attention. From afar, it felt so true. A famous face giving advice with a smile. But looking closer, I saw I was being trapped by a fake videos live. Well said, well said. SEBI and NSE advise, in any video, focus on slow eyelashes and faulty lip sync. Believe and trust only on authorized sources. Wah!
सोच कर, समझ कर, इन्वेस्ट कर।
NSE द्वारा निवेशकों के हित में जारी।
Premium boarding, premium space, premium meals and more in India's only premium economy.
Tech giant Infosys announced a strategic acquisition, Optimum Healthcare for $465 million and Stratus Global for $95 million. With this, the company has made 5 acquisitions just this year, spending a total of $800 million. Rima joins us now with more on the tech industry's M&A blueprint. Rima.
FY26 has been quite a landmark year in terms of M&A spend by Indian IT companies, the highest that we've seen in the recent past, and particularly that inflection point seems to have come in for Infosys and TCS in the wake of slowing growth. So let's begin with Infosys. Now, Infosys, as you said, has spent $808 million so far, making the acquisitions. The big one, of course, is what they announced, $465 million for Optimum Healthcare. You had Stratus Global, which was announced. Prior to that, there was Versant, which was announced by the company. This is amongst the highest that the company has ever spent on acquisitions in a single year. So last year, that's FY25, the company spent a little less than $500 million to acquire Intech. In the prior year, it was a modest, they were tuck-in acquisitions that the company had done. So as you can see, this year, with $808 million, it's been far more aggressive than it's been in the recent past. TCS, now this was a company, you would remember, which was known for its organic growth discipline. They spent $773 million in FY26, the highest since their listing in 2004. They made 2 acquisitions, and plus they had those data center investments. It's a big strategic pivot for the company, and when we chat with the management, they tell us more M&A is lined up. Now, HCLTech and Wipro, on the other hand, have used M&A far more steadily across periods. So this year, HCLTech has spent $420 million. They made 4 acquisitions. And Wipro did 1 acquisition. It was called Harman DTS. And they paid a little less than $400 million for that. But in the past, Wipro has made large bets like Capco and Rising. But, you know, outside of the large 4 IT companies, the biggest, the boldest bet came in from Coforge, when it acquired Encora for $2.3 billion. And outside India's shore, it was Capgemini acquiring WNS for $3.3 billion. Now, why is this happening? FY24 to FY26 has been amongst the weakest phases in terms of revenues for the Indian IT companies in over a decade. Revenue growth has slowed to low single digits now. AI is reshaping the whole industry. The traditional model of high higher scale bill is under pressure. It's getting questioned. And AI is also compressing the timelines. So now buying capabilities is faster than building capabilities. And Indian IT companies seem to be responding to that by getting faster, sharper, and more aggressive on the front.
Thanks for joining us. With that, it is time for us to wrap this edition of Business 360. The news will continue on NBC TV 18. Stay back in 8 weeks more.
By SBI, the banker truly.
अब आ गया न्यू यूनो तो देख प्रिंट इस आईडी से लॉग इन यूनो देगा फॉर एवरी इंडियन ब्रॉट टू यू बाय एआई द बैंक ऑफ एवरी
Policymakers and industry leaders come together to chart the way as faster but high precision by us in association with 18 CNBC TV 18 this time.
ड्रेसिंग के कंफ्यूजन में टाइम निकल गया। चॉइस के साथ इन्वेस्टमेंट में अब नो कंफ्यूजन। इन्वेस्ट कीजिए स्टॉक्स, म्यूचुअल फंड्स, आईपीओज में। डाउनलोड चॉइस फिनेक्स टुडे। Investments in securities market are subject to market risks. Read all the related documents carefully before investing.
Volkswagen. India's sharpest investment voices break down market risks and opportunities at IDFC First Bank presents Money Control Global Wealth Summit 2026.
The period of competitive advantage has shortened dramatically all around the world.
Because maximum money is made by the promoters. Why? Because they are forced to stay with his company.
That's the reason why we keep telling people come to equities only if you have a 5-year kind of horizon.
Catch the highlights at these times.
Every workplace runs on a bond between the people who lead and the people who build. We work together. We learn together.
We plan for targets. But do we plan for time?
The National Pension System, a trusted, flexible, and fully digital retirement solution for companies in the private sector. For employers, zero compliance costs, simple management. Because when people know their future is safe, they perform better every day. Smart companies adopt NPS Corporate. Future security is teamwork. That's why.
CNBC TV 18 tracks the pulse of markets and business in real time, bringing you the stories that shape the economy.
From breaking news to sharp analysis, we deliver insights that help you navigate businesses, markets, and investment opportunities.
Nuvama presents CNBC TV 18 Market Central.
Providing sharp market intelligence for wealth creation with a commitment to doing it right.
Co-powered by SBI, the banker to every Indian, truly.
Welcome back to the CNBC TV 18 Market Town Hall. As promised from global macros and the oil shock, we now turn our attention to opportunities in the market. With me is my colleague Nigel. Nigel, hi.
Well, thanks a lot for that, Prashant. Well, they say with crisis comes opportunity. And that's precisely what we're going to be focusing on here. What can you do to make money from here on? That's the big question. We have with us Mr. Harish Krishnan of Aditya Birla AMC, and we'll also be joined by Sandeep Tandon of Quant AMC. We'll be focusing on the micro opportunities with Harish and focusing on the macro opportunities with Sandeep. But before we bring them in, let's assess the damage to the markets since the entire war broke out. Prashant, take it away.
It's not a pleasant task, Nigel, but someone's got to do it, right? Assessing the damage, the tally, or whatever you want to call it. But let me go across and tell you exactly what's happened since, the 27th of February it was. Just absolutely a quick run-through in terms of what we've seen. And returns, basically, I mean, a big bite has been taken out of returns for investors. The Nifty and the broader markets have lost between 8 and 9% since the war began. The damage to the otherwise still recently resilient banking space has actually been quite large as well. The Nifty Bank has lost about 13%. This is all from the 27th of February close. But it's not just India, right? Look at the damage to other markets in Asia as well. Markets like Korea and Indonesia actually have lost the most, 14.5%, 15% in that range. You look at flows, FPI flows, which had turned briefly into the positive the month before, they've turned negative once again. FIs have sold big, and you can see that almost $10 billion or so, but who's on the other side? It's locals. Those SIP inflows providing some amount of counterbalance coming through. Now look at commodities as well. There are fears of demand destruction. There are also input shortages with regards to metal processing, etc., which basically means that base metals have taken a knock as well. Things like copper, aluminum, not so much, but a bunch of other things. Gold and silver, magnificent rally over the last couple of years, and they were all the rage through the first 2 months of this year, but they've taken sharp knocks. Gold prices at about $4,300 at the lows recently were basically back at where we started this year. And of course, valuations will come up on your screen as well. So I'm just using the Nifty, the mid-cap index and the small-cap index. And what I've done is not taken forward estimates, but trailing earnings, P's based on trailing earnings, because the future is always uncertain, but it's more uncertain right now. But on a trailing basis, Nifty P multiples at about, 18 point something compared to the 10-year average, which is about 20 plus. Mid-cap index, small-cap index. Basically, valuations have come off. The question is, have they come off enough for you to really jump in and deploy some serious amount of money and do some sensible things? That's the question. Let me invite Sandeep Tandon and Harish Krishnan. Gentlemen, if I can request you to come up on the stage, and we will ask both of you, exactly that question, what to do. Please. Welcome. Thanks. Hi, Harish. Please. Thanks. So let's start right there, guys. And, we were having this conversation earlier on the earlier panel, right? It's not just this one shock. It's like shock after shock after shock. Start with the tariff one, then there was the AI one, and of course now this is the oil shock. Let's start with the latest, which is this oil shock that we've seen and the 8-9% correction in the index. Have valuations become reasonable? Harish, let me start with you.
Sure. Clearly, as you said, that this is the here and now, but I just want to kind of contextualize. In these 18 months, we've kind of focused on 5 key resets that have happened, right? We've had domestic demand getting fired by tax cuts. You've seen rate cuts happening. You've seen a currency upgrade in the form of a sovereign upgrade. You've seen trade deals with 70% of the world economic output. And then you also are starting to see a transmission of rate cut cycle. This is what had happened before the war kind of broke out in the Middle East, right? So when you are a farmer and you start looking at, say, owning the farm for the next, say, 50 quarters or 70 quarters, what happens in the first 2 quarters has got very little meaning compared to the overall competitiveness that eventually will start coming through for the farm. So therefore, we think that, in this kind of a framework where we've done a lot of hard, heavy hitting kind of shifts in policy response to all the other issues before this kind of development, we should kind of look at this correction very favorably rather than to get worried about. So that's point number 1. Secondly, to your question about energy shock, and therefore, is it only India that's going to get impacted, or is it going to have a cascading impact to the rest of the world? Let's draw our attention to what happened in the Ukrainian conflict, right? Now, at the Ukrainian conflict, at the peak, when there was an overall commodity boom, and do remember that at that time, agri-commodities went up through the roof, overall crude shock was roughly about 5.3% of world GDP. At today's prices, it's close to about 4.6, 4.7% of world GDP. That's where the total spending on crude, if this were to annualize for the whole of the next year, is concerned, right? So there's still some gap, but the bigger thing is the Western world had far lower interest rates at that point of time. Today, a lot of that is being fed into the Western world, and that is going to have a far bigger knock-on effect, right? So therefore, if I were to contextualize, can the world really absorb such huge amount of a shock absorption? The answer is no. And which means that we think that it's going to be a lot more pragmatic, that both the administration in US and hopefully the Gulf Council kind of puts their heads together and kind of de-escalates the situation rather than letting it go out of control. So if that be the base premise, we think that, valuations are reasonably attractive in a lot of parts of the market, and which is where we think that, rather than get obsessed about the next 3-6 months, let's look at companies which have become more competitive and which are on the right side of all of these disruptions.
Nigel, what we'll do, and what we thought for our viewers, what we'll do is we'll divide this conversation after getting initial comments from you, Sandeep, as well. We'll look at the 3 disruptions: the big AI disruption, tariff disruption, and energy disruption. We'll ask both of you, which are the companies, sectors, which are on the right side of this disruption? Which are the companies which actually, I mean, for the lack of a better word, benefit or get hurt less? So that's what we want to do. I mean, there's one framework to use. But Sandeep, just to sort of kickstart and get your views, you use so many tools to analyze where we are at and whether things have priced in a fair amount of damage, or is there more to be done here? So what do you say to that question?
So Prashant, let's start. We in the beginning of the year, I described 2000 on this one of the panels out here. We talked about fragile 2026 and as a PE contraction year. And we also talked about correction in global equities, particularly DM, and we talked about a massive correction in silver and gold, because that's the euphoric move which we saw. Now, if you really look at, it has corrected a lot, okay? And we think we are getting signs of capitulation now, where even bullish thought process is getting capitulated. It's a typical signs where best of the global houses makes big targets about crude. This is not the first time we are seeing, you know. It's a human reaction, you know, when you are in pain, you will try to see that everything has changed. But the fact remains that the relevance of oil has already lost as compared to what was earlier years. Now it's a gas and we are getting a renewable. Now, if you look at the WALS data, the question which I asked, my point is that maybe yes, this month oil can remain elevated based on our predictive analytics. In February, we talked about that oil will rally, and we talked about dollar index risk to the global equities, and I think has played out. My view is that this will not last for long, and we are in the final fag end of that crisis. Maybe get extended by a few more days. That's what data is showing. Okay, and if you ask me, the beginning, by the end of the year, where the crude will be, I think it will be below 70. Okay, so where the concern, this is how we reverse calculate based what we call it market implied analytics. Okay, that is our data is showing. So I will go with that thesis. The data is got. Okay, and we are slave of data. So I'm not that much concerned the way people are panicking. Yes, obviously manufacturing sector will be affected. We have issues on the utility side, we have issues on the input side, we have issues on the output also. We don't know the trade related or the logistic challenges which we are seeing, but I think every crisis has opportunity. So I think I will look as an opportunity because India has already corrected a lot. We turned negative on India in July 2024, and I said in January what was the situation in India in July 2024. Something similar is there in January 2026 for US, and something similar is there for Taiwan and Korea in 2026, where whole world is very gung-ho about Taiwan and Korea now. We think we are getting signs of complacency out there. I will not say a maniac sort of thing, but there is signs of euphoria. I think the way I look at maybe beginning April, India has opportunity to outperform global equities, and India will fall less. And maybe by end of the year, in absolute and also you will see a new all-time high in the indices. Okay, I will not be surprised at all to see maybe by the mid of the year also. So I think this is a classic phase where everybody is giving up. Capitulation is there, and when we talk about equities from longer term perspective, but unfortunately peak of the cycle, every investor has a very high risk appetite and he's a long term investor. When 6 months later things change, I think if we have thought process, this is the opportunity, then I will like to increase our equity exposure. We were sitting on large amount cash. We have deployed up to large extent in this fall. So we like to use this as an opportunity. I think it's a brilliant opportunity for India after maybe 2 years of underperformance.
All right, take that thought very, very seriously, Sandeep, because the last time we were on the panel, you spoke about 2026 being a challenging year, PE getting derated, but you also made a point that India will outperform, and you're sticking to that stance as well. So maybe we're in for better times from here on. That said, a war like this throws up very opportunities in the post-war scenario. Could you tell us the top 2 themes that you're looking at, from here on? Power could be one, I think, so it's something that you're bullish on. Yeah. But run us through the rationale on those 2 top themes.
See, we have been, if you have to really play data center story, I think power is a theme, like how we played copper for the EV thesis in the past. I think power or energy as a sector is a great opportunity. That's one of the reasons we have more than 20-30% exposure in this space. Okay. So that's the one space which we're looking very constructive. Second space, as compared to IT, we like pharma as a space. I'm not saying all the pharma companies, but a lot of generic companies. And we have to keep in mind some of the pharma company will face challenges on the solvent side or their raw material side, which is a derivative derivatives of crude in some manner. So those are the areas which you have to exclude. Then I still like, in the current context, the BFSI space. Private sector over public sector. We still like insurance could be opportunity. Asset management company itself is opportunity. Wealth management companies are thing, because asset management companies are serious threat to banking from a longer term perspective. I think great businesses which is getting, we are also part of that industry, so we understand that space quite well. And I think other areas which have to look at should be the sum of the consumption theme. The FMCG stocks particularly, they are still expensive. On relative basis, they have corrected, they have underperformed. Many stocks are in the neglected zone. So I will look for food processing companies also should be opportunity. And if I have to avoid at this point in time, I think it's a manufacturing space, because we really don't know. And none of the companies will going to really explain, because they themselves also don't know how exactly it will. So more from a conservative approach, I like to avoid manufacturing company. You cannot avoid completely. So I will say I will dilute these holdings and look for opportunity once we get more clarity on numbers, maybe down the line a quarter or so.
अब आ गया न्यू योनो, जो देगा फैशन फॉलो करने का पावर और
आज बिल तेरा भाई देगा
बोलने का पावर। न्यू योनो देगा पावर टू एवरी इंडियन। ब्रॉट टू यू बाय SBI, द बैंकर टू एवरी इंडियन।
Sir, what do you think?
The new Skoda Kushaq. Easy to love. Skoda.
Look, this investment Guru's tips will double your money. Just claim the offer.
Double your money from any random group. Pay attention. Promising double returns, they'll lure you in tight. Unverified groups will send fake tips overnight, emptying your pockets before you can fight.
Well said, well said, well said.
SEBI and NSE advise consult only SEBI registered advisors and make payments only to verified accounts or UPI ID.
समझकर इन्वेस्ट कर।
NSE द्वारा निवेशकों के हित में जारी।
India's startup story is evolving from disruption to building enduring brands. Meet the founders redefining categories with purpose, scale, and innovation. Watch CNBC TV 18 and IDFC First Bank present Leap to Unicorn Season 3 at these times only on CNBC TV 18.
Just bought a health insurance policy. Many people assume they are covered for everything from day one. That is a common and costly misunderstanding. Waiting periods come in the following phases. From day 1 to day 30, most general illnesses and accidents are covered. For pre-existing conditions, depending on your policy, you may need to wait 1 to 4 years. The earlier you buy, the sooner those waiting periods are behind you. Now here's the part most people don't think about. If a medical issue arises during a waiting period and it falls under that category, the hospital bill will be yours to pay. Buying early lock-ins lower premiums and prevents future conditions from being classified as pre-existing. The best time to buy health insurance was yesterday. The next best time is now.
Health Cover Uncovered, an initiative by Star Health Insurance and CNBC TV 18.
CNBC TV 18 tracks the pulse of markets and business in real time, bringing you the stories that shape the economy.
breaking news to sharp analysis. We deliver insights that help you navigate businesses, markets, and investment opportunities.
Nuvama presents CNBC TV 18 Market Central.
Providing sharp market intelligence for wealth creation with a commitment to doing it right.
In a hyper-connected AI-driven world, how resilient is your network? Leading experts decode the future of connectivity, secure infrastructure, and customer trust. Watch CNBC TV 18 and Cisco present Digital Resilience Dialogues at this time only on CNBC TV 18.
ये हाथ केवल हल नहीं चलाते, मिट्टी से सोना उगाते हैं। ये हाथ केवल सिलाई नहीं करते, देश को नया रूप देते हैं। ये हाथ लोगों को उनकी मंजिल तक पहुंचाते हैं और इन्हें हम आसानी से लोन देकर अपना फर्ज निभाते हैं। कैप्री लोन्स फर्ज निभाते हैं।
Okay, all right. Harish, let me get you in there. Now, we look at global markets and we look at PEs, return ratios and the likes. You have another way of looking at it as well in terms of India's market capitalization as a percentage of global market capitalization. Could you tell us what does that come down to and what does it compare with in terms of averages? Is it lower than what we've normally seen?
Sure. So, India's share of world GDP of economic activity is roughly close to about 4%. Okay, roughly a $4 trillion economy on $102 trillion global economic output, right? And if we tend to grow at anywhere between 9 to 11%, and the world growing in nominal terms anywhere between say 4-ish odd percent, give or take, how it eventually pans out. You would think that this number should be anywhere between 7 to 8% over the course of the next decade or so, right? Now, it is in that context that you should look at the India share of market cap.
Right.
Okay, India's share of market cap is currently close to about 3.1%. Okay, in the worst of times during the Ukrainian conflict, we in the time in February 25, again we bottomed out close to about 3%. Now, 3% is not some Lakshman Rekha that will never get broken. But if you are a serious long-term capital allocator and you see that big shift that India's share of economic output is going to rise in point of time to come, if you're going to buy in at 3% of world market cap, you generally should be looking for a very big asymmetric kind of a rise. And this also needs to be contextualized for the fact that, from US, there can be a lot of flows going outside. There's been a lot of money which has chased US assets over the course of the last 15 years. What happens if there is money which is actually going out of US, given the fact that it's exceptionalism, be it on innovation, be it on, let's say, security, be it on the safe haven status, all of that comes under question mark. So I think we should be kind of looking at these opportunities as well. So I would think, therefore, that, now is not the time to panic.
Yeah.
Now is
and
the
I
time
think
to
the point
add
you
on.
made, Harish, earlier, but you used the farmer analogy, right? I think it's such an important point that trying to finesse too much that I'm going to buy 2% lower, 5% lower, over a 10-year period, it's a decimal point change, right? It doesn't matter in that sense. If you're broadly right in the ballpark. So let's talk about what are you doing right now? Let's take energy. I said I'll ask you about energy disruption and who's on the right side of it, right? So who's on the right side of it, Harish?
So, unfortunately, we are all losers because broadly we are large importers of energy, right? But within each sector, when you look at it, there are certain energy efficient players compared to the others. Now, these are going to have outsized gains because in this environment where the going is going to get tough for everyone, the last man standing is the one who is going to take the most out of that, right? So, if you look at, say, some of the larger sectors like, say, cement, which is in effect a huge energy user. I mean, cement is all about transferring from one energy form to another energy form, right? Now, over there, if you've got an edge in form of energy conversion, that is like real solid gold today, right? And that is the one that is going to compound for you in terms of that difference and that dispersion. And that is going to help you gain market share in a very difficult environment. So, I think that would be one area. Similarly, if you think about this entire unorganized to organized in, say, building materials, we've seen a huge amount of unorganized players operating in the building material space, be it in pipes, be it in tiles, be it in ply, be it in other forms of consumer durables, etc. The reality is that a shock like this, typically the weaker hands don't have the purchasing power power to kind of remain in business. Again, therefore, there's going to be a greater formalization and a cleaner balance sheet that's going to sustain through. So our call is not that, we have any edge to predict what the next 3-6 months is. But if I am able to identify and distill certain companies which are going to go one leg up compared to the rest of the competition, okay, that gap is likely to sustain for years to come, and that gap is what is going to get alpha for our unit holders. So that would be another area which I would say can come through. Another area could be, there's going to be this huge rebuild that's going to happen in Middle East. I mean, the war cannot go on indefinitely. And imagine the amount of desalination plants that have to come through. Imagine the amount of pipelines that have to go through. These are all economies for whom this is the bloodline, right? And so they're going to have a massive amount of capex that's going to come through. At this point of time, of course, there is all this fear. But what happens if even the Ukrainian war kind of stops out? Okay, how about the entire kind of that region wanting to kind of rebuild? So I think these are all opportunities. See, markets are about spotting asymmetric opportunities where the optionality is not being priced. And today we are seeing so many such opportunities which are there, which is why we are not so worried about how to kind of navigate the next 3-6 months. I think if we try and over-optimize that, we're